Because it's a fool's game.
Yes, it is.
I tell you, a fool's game. You know what else has been a fool's game this week?
What?
Shorting oil.
Since the OPEC meeting, oil's up almost 17% WTI.
The advice provided on this podcast is general advice only. All statements made are considered by the participants to be accurate, but accuracy cannot be guaranteed. It has been prepared without taking into account your objectives, financial situations, or needs. All participants in this podcast, including guests, may have a financial interest in any or all of the products or services mentioned. Before acting on this advice, you should consider the appropriateness of the advice, having regard to your own objectives, financial situations, and needs. If any private products are detailed on this podcast, you should obtain a product disclosure statement relating to the products and consider its contents before making any decisions. Where quoted, past performance is not indicative of future results.
Welcome to the Money Path Podcast, episode 126. With your hosts, Bob Iacchino and Mike Arnold, founders of Path Trading Partners. Go to pathtradingpartners.com and download MotiveWave to try your 14-day free trial. So let's join Bob and Mike with a casual conversation with some news and some markets.
Boring. Hey, Bob, what's going on with the markets?
Back to positive on the month. I think it's kind of funny that the media is focused with back to positive on the month because currently, at least as we record this, we're not positive on the week.
Wait, hold on. Where do we open June? On the Dow?
Well, I'm looking at the S&P.
We're down for the month if you go with the Dow.
Yeah, the S&P is positive on the month. I mean, the Dow's 30 stocks. Who cares?
I care about the Dow. Don't slam the Dow.
Yeah, I mean, it's still funny to me that financial news focuses on the 30 stock index that consists of industrials where some of the biggest companies in there barely move in terms of stocks. But Nike's up 11 and some odd percent, or at least it was last time I looked, based off of really good earnings and their buyback announcement. But even that couldn't power the Dow positive on the month.
Yeah, Nike trading $80 up to $81. They had a fourth quarter revenue $9.88 billion. Versus expectations of $9.41 billion. Earning per share 69 cents versus expectations of 64. And they announced a $15 billion share buyback.
Yeah, but you look at the S&P, which I think is much more indicative. I mean, I guess we should look at the NASDAQ, but I'm not going to do that because it's so tech heavy. But you look at the S&P, and we actually on the week are not back to unchanged, but on the month we actually gapped open higher, and we were lower. I'm talking about the cash S&P, and we were lower on the month, and now given today, we were much lower, but we were negative. The open on the month. Again, it was a gap open up, so it's a little unfair. If you look at the closing price of the prior month, so the closing month price of May was $27.05 and a quarter, and then the opening price was $27.1870. So we got below that, and then we got below the closing price of the previous month. We were at the lows. We were at $26.91.99. And then with today's rally, it's actually with the last 2 days of rally, we got up to positive for the month. But for the week, we're not positive yet. I think that, again, this is one of those things where the financial media focuses on this. You look at, again, the Dow itself, if you go off of the close of last month, which was 24,415.84, where we are now, 24,466, we are positive on the month. But if you go off of the open of this month, we're not above this month's open, which I think is more important.
But we're back above the 200-day moving average.
We are. And again, we're up above the close of last month. So you'll hear financial media saying that means we're up on the month. But we're not up on the month. We're up versus last month.
You have to be very specific.
Yeah.
Are we going to hold the 200, or do you think we're going to start breaking down again?
I don't know. I mean, I'm not one of the things I like on the S&P, and Mike, you'll appreciate this, if you go to a monthly S&P chart, right, you'll see that we're above sort of a best fit trend line from the highs. It's not even a best fit. It actually would be a correct path trading brokers trend line. And we're going to close above it. So I like that on the monthly. So I'm going to go with that and say that we're probably maybe not out of the woods. There might be, there's not going to be a redraw anymore of this particular path trading partners trend line. But I like that we're above that. It really only takes us to the top of that single candle, right, which would be about 60, 70 bucks higher on the S&P from where it is now. NASDAQ has made new highs recently. NASDAQ never even officially corrected. So I'm not negative equities at all. I just think that if we don't get some progress in the trade discussions, we'll have another sell-off. There is that whole end of month. By the way, there's a lot of people out there talking about like end of month rebalancing is happening. Nobody knows what that means, just for everybody listening. Generally, you'll get, especially TV guys, they'll go, well, we've got end of month. But they say that when the market is up, and they say that when the market is down. And if you ask somebody to explain it, they'll go, oh, they buy the winners and they sell the losers, and they want to show their investors that they were in this particular stock, blah, blah. Nobody really knows what that means. Nobody knows what any large hedge fund is doing except the actual traders in that large hedge fund. So don't put too much stock in this. Having said that, there are end of month, end of quarter anomalies that happen. Like you'll see big illiquid moves, and then you'll see those reverse again when the new quarter starts or the new month starts. So if it were like in the middle of the month or in the middle of the quarter, I'd be more inclined to say that it's going to hold. I'm just not prepared to say that personally. I don't know. What do you think?
I don't know. I think the beginning of next week's going to be very telling.
Yeah, and we've got a holiday week in there, so you're probably going to get a few illiquid days. I mean, it's a strange day for the 4th of July being on a Wednesday, so we're going to be closed on Wednesday. It's going to be very illiquid on Tuesday. You might even see people extend this entire weekend and not come back to work until Thursday, and then it's Thursday, so you're coming into Friday, but we have non-farm payrolls on Friday, so the first week of July might not even tell you what's going on. Having said that, the first day of July is historically the best day for equity markets ever.
That's good. It's Sunday.
Yeah. Well, the first trading day of July. I don't mean July 1st. I mean,
no, I was going off July 1st. We could trade the futures when they open on Sunday night.
I mean, if you believe that data, you probably should, right? Because it is historically the best individual day for equities. Period. Exclamation point. One of those seasonal factors I like to mention. Anyway, so that's what's going up. Deutsche Bank's going to zero.
Well, no, it's bounced up on the fact they failed the Fed test on qualitative grounds. They failed the stress test. Mm-hmm. They were the only bank to do so, which it's going to hurt them even more because the Fed criticized them for, quote, widespread and critical deficiencies in how it handles its capital and manages its finances. This means that Deutsche Bank will be restricted from transferring money from the United States to its Frankfurt headquarters, potentially making the Wall Street operations less lucrative at a time when the bank's top executives are already mulling cuts to the business. So they can't take their money back home because they don't have enough of it here to cover potential losses.
Isn't that funny? I mean, you could just see like the German press saying that was fixed so that they can hang on to the money.
And who else there was a little slap on a couple others. Who was that? Morgan Stanley and
Goldman Sachs.
Goldman, who said they...
There was a phrase for it. What was the phrase? It was something like a... non-compliant objection or something like that. I don't know what the phrase was, but they were basically saying, look, you can return money to shareholders, but you're not in great shape. It's just okay to do that.
Yeah.
They sort of limited them on their share buybacks to what they currently had in place.
They have the Goldman Sachs and Morgan Stanley have to freeze payouts to last year's level, so they can't increase any payouts because they didn't fail, but you can't spend more of your money and put yourself in a bad position is essentially the way I take it.
Yeah, I agree.
So that's but Deutsche Bank, it bounces up. It's like, I guess this is sort of buy the news.
Well, what I heard was that people were saying, okay, now Deutsche Bank has to make some improvements, so it's probably a good buy here.
I don't think I'm buying Deutsche Bank right now whatsoever.
You haven't been for a long time, and you've been right. So
there's no way you're rushing it. Because, again, it's just like, okay, we bounce a little, we go back to the rotation zone, and then more bad news comes out at some point, and it goes back out. So that's when we're not going to call a bottom in until we get a bottoming pattern that triggers. Can you talk a bit about what's going on with oil?
Sure. Since OPEC decided to increase production, the initial announcement, which was a press conference on Friday, was 600 to 700,000 barrels. And then there was some sort of, I don't want to call it a complicated mathematical formula, but it ended up saying that they could boost it. They said over the weekend they could boost it by as much as 1 million. Considering that OPEC had been operating at 152% compliance of their promised production cut, so in other words, they had cut half as many more than they said they were going to cut. So let's say they were going to cut 1 million barrels. They had actually cut 1.5 million barrels. So the glut is now gone. We're below the 5-year average on inventories. We're below inventories last year this time. The glut is gone. It had been at 340,000 barrels. Actually, yeah, I think that's right. 340,000 barrels of glut per day, right? Barrels per day. So that has been reduced to nothing. This particular production cut, if you cut it in half because of that excess compliance that OPEC got, you come to about a 500,000 barrel increase. And if you look at what Libya is short, I'm sorry, not Libya, Venezuela. Venezuela had produced at their peak this year. Okay, their previous peak was close to, what was their previous peak? I think it was like 3.5 million barrels a day, somewhere in that range. But that was in the 70s. Their peak, like their recent peak, had been somewhere in the range of just under 3 million barrels a day. So like 2.99, somewhere in that range. And now they're at 2.37 million barrels a day. So if you add in 500,000 of increased production and you take away that other 50% of excess production cut, you wipe out that 1 million barrels and they're still in a production cut. So there's the supply problem. Number two is the demand equation, which a lot of people don't understand because what you see is demand estimates, right? You see demand estimates all the time. And the place you see actual demand is in refinery utilization figures in the U.S. Now that's demand for WTI. In the last 6 weeks, refinery utilization has gone from 91.8% of total capacity to 97.5% of total capacity. It has not been this high since 1998, when it actually exceeded 100%. I still don't know how they did that. Maybe they built a tent. I don't know. But in that period of time, they actually exceeded 100% of capacity. Now, in the physical oil patch, most people consider 95% to be max capacity, because when you're at that, you're able to take care of broken down parts of the refinery or do some maintenance here and there and not run it full out. They're close to running it full out right now. That is actual demand manifesting. So you see actual demand in the refinery utilization numbers. That means it's not only an issue of supply, but it's an issue of demand. Back to supply, Libya has the potential to lose 840,000 barrels a day of oil because rebels have turned over a couple of key ports to a non-Tripoli backed sector of the government, meaning UN does not recognize them. And then lastly, on the supply side, the executive branch of the U.S. earlier this week basically said they want everyone to be at 0 barrels from Iran by November 4th. based on the U.S. pulling out of the nuclear agreement. And then they walked that back a little bit by saying that all they meant was they want to help as many allies as they can get to zero. Iran responded by saying it's physically impossible to get to zero because there's so much demand for crude oil, and they're not necessarily wrong about that at this stage. So everything pointed to higher prices, and that's exactly what we got, higher prices.
Today we had that double bottom trigger, went to full target. Then we had to extend our GAN. We had to do a reverse GAN box, which gave us the next target 74.09, which we've been through. Then the target beyond that 75.28. And right now we've had a high of 74.43.
I did a GAN retracement extension, Mike.
Okay.
From the lows of November 9th to the highs of May 22nd, back down to the recent low on June 18th. And the 75% retracement extension came in at 74.52. On the high is 74.43 right now. So do not dismiss your GANs. Reach out to Mike if you want to learn them.
So yeah, they're very interesting, but that's our crude upside. So gas prices aren't going down anytime soon.
No, not longer term. No, not medium term, I should say. We are going to have a fall in the summer driving season will tail off in toward the middle to the end of July, and that seasonality will put a little pressure on it. But it's like I said a couple of weeks ago, both on the podcast and on articles we wrote and TV appearances, the most likely scenario for crude oil is supply disruption. And the demand continues to show itself. So unless demand falls off, which could happen from a reduced synchronized global growth based off of trade wars, but that will take a long time to manifest. It won't, tariffs, the first batch of tariffs go into effect next week, a week from today. Again, we're recording on Friday, so it'd be a week from today, the day the non-farm payroll comes out. That's when the first batch of tariffs on Chinese goods go into effect. You're talking months and months and months from now for, first of all of that to play out, and then for it to actually affect the global economy. So no is the answer to your question. Not anytime soon.
Gotcha. Did you see that interesting chart in the show notes about the fate of cryptocurrencies with 50 million plus market caps?
Let me look at that, because actually I screwed up and went away from the show notes looking for my information on Venezuela. So hold on one second. Let's see, meeting notes. All right, Stafford, you can cut this in if you want. Yes, I did see that, Mike.
I thought it was pretty interesting. That was provided by the Stasis Group. So only 8% of the tokens with 50 million plus market caps move on to trade in an exchange. Here's the breakdown of it. Scams, 81%.
So what happens to those coins? The money's just gone?
Just gone. And it's gone. They were just done originally as a scam. There was no intent to ever try to be successful. Failed, on the other hand, means they just failed. I don't know. I didn't see the exact difference between failed and gone dead. I mean, I guess gone dead means they were active for a while and then they just petered out.
Well, I'm not sure when they have 50 million plus market caps, that doesn't necessarily mean they raised $50 million, right? It means that the coins are theoretically worth 50 million if they were sold at the high.
Yes. At one point, they had a market cap based off the volume of coins out there and what they were trading of.
Just want to understand what that means. And yeah, failed, I guess, means goes to zero. Gone dead, what does that mean? They're sold. And
maybe they're just not actively traded anymore, and so they're just they haven't drowned yet, but they're not swimming. Dwindling 2.8, promising 1.6, and successful 3.8. So I guess if you add up the dwindling, promising, and successful, you get to that 8% of trading on exchanges. But that's pretty. The big thing is scams. This is why you got to be so careful out there. This is why we pretty much just stick with the big ones, because you never know. So I thought that was sort of interesting.
So,
what was that?
I'm starting to form an opinion that I'm starting to form, and Stafford, I'd be interested in your opinion on my opinion, is that the difference between a token and a coin is a token is used in an ecosystem and is more likely to be backed by not necessarily assets, but a process or a thing or a product of some sort. Whereas coins, which are theoretically trying to be used as currency or stores of value, I think coins are riskier, I guess is what I'm saying. Because and again, this is my definition of the difference between a token and a coin. I think a lot of people think those are homogeneous words. I don't. To me, a token has something behind it, and then you can actually vet or analyze what's behind it and decide if you agree with the mission or not. I don't know. What do you guys think? And before you chime in, guys, I'm going to go on mute and record my Bloomberg thing, and I'll come back so you guys can talk about that so that we don't have a break. All right, I'm muting.
What? That's it. What kind of question is that? What kind of question is that?
The difference between a token and a coin.
So tokens are Batman and coins are Superman. Does that help? Is that correct?
Alone. Yeah.
Tokens
Then
are...
what's Wonder Woman? Well, we haven't. Yeah, it's just this is why, with our videos, we're only waiting for the high probability setups, and these things just they can't hold any rally. They cannot sustain anything. They slam into the rotation zone, especially on the daily basis, and just rotate back down. So that's why if you're doing any bottom picking, you should be tuned into our videos and know where the rotation zone is, because as it gets to the rotation zone, you better move up your stops or take some profits, because you better or be prepared for it to rotate back down lower. Right now, it's just fighting the trend, and the trend is down.
And he's back. What else you got, Mikey?
He's back in time for Amazon to acquire PillPack.
I love this. This is my favorite subject this week.
All right, let's talk about PillPack.
Go ahead.
Yeah, I don't have anything.
Well, PillPack is a genius idea that I didn't even know about. So, all right, so I don't know how much we want to talk about this, but I had a need to sort pills for about 18 months a while ago. And it was 2 hours every Sunday to sort out and count out and separate pills for certain times and things. So for a family member. So this PillPack thing, I didn't know about it. I would have absolutely loved it, knowing that I could get them marked with day and time, pre-separated. But the interesting thing about this to me is grocery stores got completely crushed when Amazon bought Whole Foods. Kroger was one of the worst. They actually call it the Kroger story or the Kroger effect right now. And it was an absolute buy. And one of the reasons is it takes a long time to integrate things like, a grocery supply chain and things into how Amazon does their business. They're not necessarily hand in glove. I think two things happen for me on this. Number one, Amazon becomes an even stronger buy and hold to me. I mean, you want to own Amazon 10 years from now, in my opinion. Number two, it takes a long time to integrate something like this into Amazon's business model, number one. And number two, prescriptions are one of the stickiest things out there for consumers. In other words, once they have their prescription at a certain place, they don't move it. Walmart found that out, Sam's Club, right? It took them years and years and years to get people to get cheaper prescriptions from them. People still would go out of the way to their Walgreens, their CVS, their Rite Aid, wherever it was, to get their prescription, because that's just what they always did. And it's automatically refilled, etc. The third point about this is the people that currently have a lot of high-priced, what would be lucrative to the pharma sector prescriptions are 50 and older. That's also the smallest demographic in terms of growth for Amazon. they're theoretically the least price sensitive, although in reality they probably should be the most price sensitive. They're theoretically the least price sensitive. They don't necessarily look for online convenience as a group as much as millennials or even 25 to 45 do. So this is a long play for Amazon, in my opinion, and pharmacies become a massive buy for me. Now, the charts look terrible. Right, the charts look terrible. You look at a CVS or the Walgreens Booth Alliance. The charts don't really look inviting at all. We just had the 50 cross over the rotation zone on CVS 2-3 months ago, and the charts look horrible. But if you're a buy and holder, actual pharmacies to me is something to look at. So I love this story because I think Amazon will disrupt this in a tremendous way, but it's going to take time. It's going to take years and years. First of all, to convince older people who are used to just going to their regular place, and CVS does prescription delivery, so that's no advantage. But it'll take a long time for those people to break away and say, I'm going to stop getting the prescriptions that are keeping me alive from CVS, and I'm going to save a little money and get them from Amazon.com, where they currently don't buy anything else. So it's a tough nut to crack. But once they crack it, and once their core demographic gets old enough to need prescriptions, it's huge money for them.
Yeah, when you can get Amazon can start delivering your prescriptions by drones, then you're all set. So yeah, this is an interesting take on it. Amazon off its highs it's trading 1705 right now, down from 1763. It's actually interesting. It's sort of forming a somewhat bearish pattern right now, so we might get a bigger pullback in Amazon.
I think the more important Amazon story is the one about the entrepreneur support they're doing for delivery. Did you hear about that?
I heard about it. I didn't do a ton of research, you know.
Yeah, so they haven't actually launched the program yet, but in certain cities, a lot of them, they're going to actually allow people to start their own delivery businesses fulfilling Amazon deliveries, same-day deliveries especially, where you can lease the vehicle from Amazon. They'll help you set up your C Corp or whatever it's going to be, and you can just go to an Amazon fulfillment center, pick up a bunch of packages and deliver them and earn money. Sort of the package Uber kind of a model, right? Which allows them to cut costs, cutting out FedEx and whoever, and USPS and UPS and whoever else they use. I'm not really familiar with who Amazon uses, but cutting them out on a decent portion of their deliveries and starting small businesses at the same time. So it's liable to be politically popular, you know, in terms of the public supporting this kind of an idea, as well as giving people jobs, which again is like the new economy, right? The new economy is structurally bad for job holders, especially physical job holders. But then you get ideas like this that sort of replace old jobs. I think that's a much more important story for the stock.
Yeah, it is. It's interesting what they're doing. And that is sort of what Uber tried to do for a while, you know, lease the car and.
Right. But and they found out essentially they were all employees, right?
Yeah.
So.
Yep.
But I don't think it'll be interesting because like Amazon may do that, and then I guess the test may be if Walmart says calling all Amazon drivers, you can also pick stuff up here. And it'll be interesting to see if Amazon tries to stop that, then they're now employees. And that's what I would do if I were Walmart. As soon as that process began, I'd do a TV commercial. I said, hey, if you're an entrepreneur who's been delivering for Walmart, we'll also pay you.
Delivering for Amazon, we'll pay you to deliver for us, so you can
exactly. And then pizza places, we'll pay you to deliver pizzas. And, you know, it's just be all these delivery trucks flying around.
So you can work for Amazon, Walmart, and Domino's.
My 14-year-old niece the other day at 10 o'clock at night, my mother was over there watching him, and my mother called me and she goes, "Do you know you can now order ice cream from McDonald's at 10 o'clock at night and they'll deliver it?" I'm like, yeah, I gotta go. I don't want to talk. I'm just getting lazier and lazier.
You don't have to get up anymore. You just can have everything brought to you. So, did you see that thing in Skype, that Twitter thing about the paint capacity of Tesla?
Yeah, I read all about it.
Sort of interesting. They've
That poor little factory, that Numi factory from the 80s, that poor little
Well, I
factory.
hear about that, so tell me about that.
well, a bunch of the people with freedom of information and stuff, because when you run paint shops for auto manufacturers, there's a lot of toxic. You have to jump through a lot of hoops because of the toxins you can release in the atmosphere. So they've deconstructed when Tesla got its permits and put on its paint shop and everything else. And they've only still got one paint shop running with all the necessary equipment. The most cars they can do per year is 250,000 total across everything, and they can't. If they do 5,000 a week of Model 3s, they could not produce any Model S's or X's because they could only pump out 5,000 max capacity. That's running the paint shop like literally 24/7. That's the most number of cars that they're permitted to put through the paint shop. Period.
They can't paint enough cars. That's it.
They can't.
They can't paint enough.
They can't make more than.
They got cars that they're lined up for paint, and they can't paint enough cars. They just can't paint enough cars. They're out of there. They can't paint it. They can't run any more paint jobs. They can't even run a crazy tent in the back to do shady tree paint jobs. They're so behind on paint jobs.
Well, and they can't legally paint more than essentially 5,000 cars a week at 24/7, and you can't run a paint shop 24/7 because it again, like anything, needs maintenance. Well, just
Can't they just contract with Earl Scheib?
Huh?
Can't they just contract with Earl Scheib? He'll paint any car, any color.
So they're gonna now haul the cars off site, have them painted off site, and then bring them back on site.
Do they still exist, or those Earl Scheib paint centers?
I have no idea where you could get the $100 paint job.
Yeah, we'll paint any car, any color for $99.
Yeah, including your windshield and your door handles and everything else.
They did not promise the door jambs or any of that. It's just like they kept the door closed, just painted it up.
So that's one thing. It's pretty interesting, all this undercover work, and then the guys flying the drones outside because they parked semi trucks to block the view of the tent. So people were flying up drones. And then they started parking. It was one drone footage. It was classic. The guys flying the drone, taking a look at, like, they're still off of Tesla's property, but looking over the fence. And, like, these security guys are throwing water bottles at the drone, trying to knock it out of the sky.
Oh my God, you're going to have Tesla security guards firing BB guns at drones.
And then now they have security guards parked outside the fence, so you can't even get close enough to it. They're really protecting what's going on in that tent. They don't want anybody to see what's going on in the tent. Oh, and then their CIO, they fired their CIO now. He was only there 1 year, and they just fired him as part of the reorg. So no CIO anymore. Chief Information Officer, for anybody who's wondering. So they only have now 3 C titles left. They have Chief Executive Officer Elon. They have J.B. Straubel, Chief Technology Officer, and the Chief People Officer, Gabriel Toledano. So
Don't see that in the notes, or I'd try to say it for you.
I'll put it. I didn't.
It's okay.
Here, you can pronounce it for me. So more people leaving Tesla. So let's go. But everybody's waiting for. They have all hands on deck. Saturday is the last day of June, and being the last day of June, are they going to make their 5,000 per week burst mode, which is so funny because even if they say they did 5,000, it doesn't really matter because it's not sustainable. Oh, and they've now opened up to all rest of North America. Any reservation holder can order their car now, but you have to send them $2,500 more that's non-refundable, so you have $3,500 on the hook. They're doing like a massive cash grab, and they can't tell you when they'll deliver their car, but if you want your car, you have to put down $2,500 more.
Gabriela Toledano.
Thank you.
You're welcome.
So they're really looking like they're desperate for cash. And they had to hit that 5,000 a week, else Moody's said they downgrade them again, their bonds, so I don't even know if they're going to hit 5,000, probably hit 5,122 cars or something, but it's going to be some stupid burst mode. And then the stock will rally again, which I like because then we're setting up for another really nice double top.
Amazon also announced they're going to be taking consumer space travel deposits in 2019. So that race with SpaceX that Bezos announced a while back, he said he's going to start allowing people to purchase tickets for recreational space travel by 2019.
Well, there we go.
Same time, SpaceX launched their 12th rocket this year.
Yep, that was
this morning.
Yeah, the Dragon. The Dragon. So that's what's going on. That's all I had on Tesla this week. It's going to be interesting to see what they... did you ever get what I said about Bullard and everything before that?
I didn't get any of Bullard stuff, no.
Oh.
I didn't hear any of that, so I assume Stafford didn't either because you dropped.
Okay, well, I started off with the U.S. economy segment. For U.S. economy segment, Bullard was talking this week. He repeatedly said he favors the Fed leaving rates where they are for now, and he's worried about a yield curve inversion, and that's a key near-term risk for the Fed. So he was pointing that out again. Where's the yield curve right now before we get into other economy news, Bob?
It had gone as low as 32, but let me double check for you now. It's good to have that be up to date. So give me 2 seconds to double check that out, and you can talk about something else, or I can ramble while I'm looking for it.
You ramble. I like when you ramble on.
Well, the economy itself, again, the U.S. economy seems to be going in the right direction for the Fed. We had core PCE that came out on Friday, and core PCE came out at 2%. It was expected at 1.1. We all know the Fed's inflation target is 2%. What many people don't know is that is the Fed's preferred inflation gauge, is the core PCE. So again, PCE came out, PCE did well. In terms of consumer confidence, which came out today, and we didn't have a ton of U.S. data this week, but in terms of consumer confidence, which came out today, we had a little drop. It was the University of Michigan's Consumer Sentiment Index. We had a little bit of a drop there versus expectations. Came out 98.2, was expected at 99. That doesn't bother me much because if you look back, when you have spikes in volatility, consumer confidence tends to drop. Now, we didn't have a very big spike, but we did have a spike in volatility. It wouldn't have been, in hindsight, enough of a vol spike where I would have predicted a drop in consumer confidence. So there could be more than one thing going on here. So consumer confidence is not a big deal. The PCE fits in with the Fed. Given that, yields didn't really move much. So it's not being looked upon as inflation is out of control at all. The yield curve itself has gotten as low as 32. It is 32 as of the close yesterday. That's 2s to 10s. So it does continue to flatten. For reference sake, if you go back to June 1st, the 2s, 10s yield curve was closer to, 39. So it's gone, this month, it's gone from 39 to 32. Prior to the Fed meeting that we had in May, it was at 43. So it continues to move in the direction of flattening. I don't think it's going to flatten. And the interesting thing is the banking sector actually does well after a prolonged period of flattening that does not invert. And we're seeing the XLF rally today after the bank stress test thing that we already talked about. So the U.S. economy continues to look pretty good, pretty strong. Atlanta Fed, I think they dropped their GDP now, Mike, but they dropped it to 4.5, which is not, that's still fantastic. And then GDP, the final look at Q1 GDP went from 2.2 to 2. You look back since the financial crisis, the first quarter has historically been the weakest GDP, and then we go up from there. So that 2% drop from 2.2 to 2 means nothing in the face of what's expected to be an over 4 GDP coming out for the particular quarter that we're in now, second quarter, which ends today. So that's really all I have for the economy. Bullard, again, is not a voting member anymore. He's president of St. Louis Fed, but he does sit in on the meeting, so I'm sure his opinion holds some weight. But right now, you saw the Sintra conference last week, which is the ECB's central bank conference. That is essentially all the Fed speakers, including Jerome Powell, basically stuck to the talking points of it's okay to raise rates.
The GDP Now model estimate that just came out this morning for second quarter of 2018 is 3.8% as of today, June 29th. They dropped it from 4.5 to 3.8.
Okay, so it's dropped since the last time I looked at it. People have to remember that's not a prediction, it's a tracking number. So like when there's weak data, it drops, and when there's strong data, it pops.
But it's been above 4.5 since the end of May, and now it's down to 3.8. And let's see, and there's also the one from the Nowcast model is dropped from 3.7 to 2.7.
Who is Nowcast? I don't know who that is.
We have at St. Louis and Atlanta. So
St. Louis puts out Nowcast?
Yes.
Then the Atlanta Fed Index is the GDP Now.
Yes, the St. Louis Fed Weekly GDP Nowcast. That's been so there's three of them. Then you have the New York one. So there's three different. They have three different models, and again, these models have been way off before. So it's what's interesting. They got the weak data, some weak data this morning, so they slashed their models. That's essentially what it is. But if there's, again, what you said, if there's strong data, the models go up.
Yeah.
So
it's interesting that two branches of the Fed could be apart by almost a full percent.
But we've seen that before. I used to report on them all the time. And they were like, one was like at 1.8, one was at 3.2, and it's like, okay, you just average them.
St. Louis is at 2.7 and Atlanta's at 3.8. Is that right?
Let's see.
Bullard's from St. Louis.
Yeah.
Okay. All right.
The second quarter real personal consumption expenditures growth declined from 3.7 to 2.7. So that's their real consumption expenditures. And then what's their full model? The St. Louis Fed GDP Nowcast, sorry, I got the two numbers mixed up. It fell from 3.4 to 1.29 today. So we're even bigger on their two official models. We're even bigger.
Okay, wait a minute. So New York is at 1.9?
1.29.
Wow. So we did get the way as a portion of that number, as a portion of that drop, something I left out of PCE because I was just concerned with the inflation number of that was personal income came in as expected. I believe it was up 0.4, but consumption did drop. Personal spending dropped.
Yeah, it was they were expecting 0.4. It came in 0.2.
Yeah.
So it came in half of what was expected. So yeah, that's pretty much all I have.
I got to step away for 1 second. I'll be right back.
I thought you'd be in the know.
I've been so swamped with the stocks that I'm drowning. So I have not even. I could barely get this stuff in the show notes.
All right. We got a show?
Yeah, we do. Anything else
No, I got nothing else I want to talk about. We talked about crude oil. We talked about pharma. We talked about the Amazon stuff, the delivery service stuff. That's all I really want to talk about. Did we miss anything big? I don't think so.
Tokens are Batman and coins are Superman. See, it's very easy to understand about cryptos, the superhero league of cryptos.
There is a YouTube video that analyzes all, I believe it was 60 fights between Batman and Superman, and Batman won the majority of them, but through cheating, which sounds like your analogy would be right to me. And having said that, good talking to you guys again. I'm Bob Iacino.
And I'm Mike Arnold. And we'll talk to you again soon. Bye for now.